I think I'd like to keep it quite short. I guess that successful investments in clean tech is probably not any different from successful investments in any other sector. The partnership element is actually very important for us in the sense that the color of money is not necessarily the same for all investors. What makes, I think, a successful private equity fund over time is the value that you are bringing to your investee companies over and above just the money that you invest in them. And this requires absolutely active partnership with the investee company. From our experience, for example, we invest a lot in the projects side of the clean tech space. And one of the very typical requirements of our investee companies when they roll out projects in various sectors, for example, we invest a lot in the waste to energy sector, is the question of project financing. This is a headache in almost any country that you can think of. But we, as a fund, we have extensive relationships amongst the banking community. And this is a value that we can deliver to our investee companies by bringing and organizing project financing for their various projects. And this has been very successful for us in our track record.
So basically you're moving beyond equity stake into trying to provide a comprehensive support service for raising all sorts of finance for projects.
Well, we help our investee companies raise the project finance for their projects.
Okay, next one on the panel is Fabien. He represents EDF and he is collaborating with a fund from a point of view of a large utility company.
Well, today what I would like to share with the audience is a partnership between a 160,000 employee utility called EDF, one of the largest utility in Europe, and a 20 people VC firm called ID Invest in creating a corporate VC fund, Electranova Capital. It's a clean tech fund created by EDF and ID Invest last year. And I think this is the kind of partnership that was successful to us. The benefit for a typical clean tech VC fund is to be able to leverage 2,000 experts of EDF, EDF R&D, in assessing the technology. So this is a huge asset for a VC firm, usually small companies. And also to be able to test the new technology from the startup company with our business unit, and to get a vision from people from the power industry, people from operation, and get this feedback from the operational is very valuable also in order to assess a technology and a business model from a startup company. And for us, obviously, we are a big, huge utility. We don't know nothing about VC, and leveraging the experience of ID Invest was very interesting. So it's been a year now that we created Electranova Capital, and we already invested in 3 companies, one in offshore foundation, one in demand side management, and one in battery.
Thank you so much. Next in line is Hock Chuan from EDBi. We had a chat in advance on the phone, and they've got some very, very interesting approaches to partnerships in particular for the companies you've invested in.
Testing. Testing. Okay. Well, thanks, Matthias. I just want to make an observation. I think Matthias has been very clever in assembling this panel. If you notice, you have on the left you have a pure VC. Han Meng is a pure VC, and then to my left and right you have 2 corporate VCs, EDBi is like a corporate VC, but you know, in this case, the corporate is not a company like EDF or Siemens. The corporate is actually Singapore Inc. So I like to say that we are a corporate VC, but with a broader mandate. So let me share the EDBi's perspective of what we have learned being a good partner to our investee companies. And I think the key element that I think make us or make our portfolio company work with us is that I think when we set out to form the partnership, we take a lot of effort in trying to have this common objective and meeting of minds. So it's about, before you get to bed, you say, well, you know, let's decide what we really want to do and let's agree on that. And let me talk a bit about that. But before that, I think it's also useful to give a context of who we are, what we are. So EDBi, the I is for investment. So we are the investment arm of EDB, which stands for Economic Development Board. So EDB has a mandate to attract investments into Singapore, and with the sole purpose of driving economic growth in Singapore. And when we support that role through our investments, and the focus of our investments are technology companies that have new products, new services, and have new business models. So let me come back to partnership and meeting of minds. So the kind of companies that we look for and our sweet spots are really companies that are at a stage of they are companies that have a product. They already finished their development, and they are tasting success in their domestic market. So the product work, people are buying. And then they start thinking, hey, you know, this product, I can bring it out to, say, Indonesia, right? Population of 250 million, or maybe Philippines, 100 million. So you add up, say, Asia is over 500 million. So they decided, hey, you know, I can take this out. I can grow my top line. I can accelerate my growth. And this is at the point that they think about it. Maybe I need to raise around money in order to support that growth. And this will be the group of companies that makes a lot of sense for us, because this will be the company that will fit our profile. These are the companies that we want to attract to this part of the world, that they can leverage on our network and have access to 300 over people in EDB, which is my parent organization, and they have 50 centers, 50 offices internationally. So what we value add to these companies, that we can help shorten their learning curve. They want to come to a new market, they are inexperienced. We say we can help you. We can share our information of what we know in this market. We can make available our network and bring you quickly into the market and connect you to the right people, to the right customers. And of course, Singapore itself has its advantage. I think you have a taste of what we do. Thank you, Anthony. And you know, what we do is quite similar to Anthony in making Singapore friendly to startup companies, and we give them access to our test bed. If you have a new product, you want to prove it out, we can do it. You want to showcase, we can do it too. You want to partner. Research institute, we have a university, we have a big research group that invests $1 billion a year, every year, in research areas. And also we have a very thriving ecosystem of investors. You have VC here, you have PE, and you have project financiers. So it's quite a complete ecosystem, very friendly to startup companies coming to this part of the world. So just to wrap up again, so for me, I think what works for us and has worked is that we are able to work with companies that are interested to expand to this part of the world. They are here because of business reason, and we are commercially driven, and those business reasons sync with us, and we work with them closely to help them grow. Thank you.
Thanks, Hock Chuan. And I think you're right. We have a very balanced panel here, but I have to return that compliment back to Terrapin because it wasn't me that selected you fabulous guys. It was them. And now we've got Gerd, who, different from Fabien, maybe Siemens decided we can do it ourselves. We start our own venture capital organization as opposed to tap on existing external resources. So maybe you can share your experience and insights into success and partnership, Gerd.
Okay, let me try to, and thanks a lot for having me here. I'm not going to dive into that French-German thing, by the way. We'll leave that for the evening and a couple beers. No, Siemens Venture Capital has been around now for about 14 years, a little over 14 years. And let me go back why the whole organization was put in place. It actually started out of a partnership ecosystem that the company ended up developing to enhance internal innovation efforts. We have 10,000s of engineers, but they can only do so much more innovation happening outside, and we wanted to find other ways to bring that closer to the mothership. So that's why the organization was put in place in '99 with, first of all, a strategic mandate, identify those exciting technologies that find a role, find a place in Siemens product solutions offerings. At the same time, while we have that strategic mandate, we are financially motivated, which is a very important aspect. So at the end of the day, when we make an investment, you can also expect us to be greedy investors like all the other VCs are. So we're in the same camp there. What is the logic behind it besides just bringing innovation into the parent company? I think there's significant benefit that we can actually bring to the portfolio companies. And thanks a lot, Chan Han, for mentioning that. And we don't just want to be money that we put into a company, we want to add value. How do we best add value? Probably by leveraging the parent company, the operating units in there. And that defines a little bit what's our investment scope, what type of companies do we invest in. So we look for those potential synergies, something that can align with what the parent company is doing. That also means most likely it's a company which has product available or is about to launch it into the market, because that's when we can leverage Siemens sales, marketing, service channels. It's a company that probably has reduced technology risk already quite a bit, but is still facing the market risk and all the execution risk. So in average, our investments are expansion stage, but we also do some early stage. Let me give just a few examples of investments we've made over the years so that maybe gives you a better sense. Several years ago, we invested in a company called Serveron. They were working on a transformer management system. They got acquired by BPL Global. We are still a shareholder in BPL Global. And Siemens has actually helped BPL Global enter a number of international markets with that transformer system, and it's turned into a very successful relationship. I'll give you another example. About 2, if maybe 3 years ago, we invested in a small company out of Norway called Wirescan. Very early stage, unusual for us, but we did that. They had a very, very interesting and unique technology for testing power cables while they are energized, which means they are in use. And we've helped the company quite a bit in refine the product definition, and they just entered the market now with a product a couple months ago, and Siemens is one of the sales channels. So we are doing that with our portfolio companies all the time. We do that because we feel like that's how we can accelerate the company's growth, how we can make them more successful, and that goes back to my earlier point that we're also greedy people because more successful companies ultimately make for a better exit.
Sounds good. I remember after starting my green building materials company, we had our wise advisor, the late Rainer Früh, and when I said, hey, we need to get venture capital in, he was, oh, no. Those guys are going to squeeze you. So that is the feeling on the ground. But another experience, just to chip in, we were talking with a big company, and the first thing this big company did, get their R&D people from the lab involved to test our products. And these guys saw us as competition. So they we had the impression they manipulated our stuff because they didn't want anybody else to interfere on their patch. So I think sometimes you need to have this, macro entity that looks at innovation potential, who takes a stake and who then drives as an impartial entity to get the maximum success. And that's what I call partnership, right?
I think a partnership can only be successful if it makes business or economic sense for both parties involved. So that also means when you as a startup company approach a big company and you talk on an engineering level, you will run into exactly that problem that you just described. I'm an engineer by training myself, and I remember how it was. We could always design the best product better than anybody else. That was just the mindset, and I think an engineer has to be that way. Otherwise, you wouldn't be proud about the work you're doing. But it doesn't always make economic sense because of time to market, because do you really have the talent, and so on, and so on, and so on. I think in order to get a partnership to really work, you need to first establish that common business interest, which also means you need to get someone involved high enough in the food chain, in the partners organization, someone who has the P&L responsibility and says it really makes sense to partner, not develop that in-house. And that person, that individual becomes your sponsor then for the partnership.
I think we had that discussion earlier on where we realized, hey, often it's not defined what is supposed to be the outcome of the partnership stroke the marriage here, a little bit like, you know, you're on a date and you are, you know, hey, I like you, you like me, are we going to get married, without really clarifying what are going to be the boundaries of the joint interaction. So I think that's an important point from our pre-discussion. I wonder whether you guys can comment on that. Did clear definition of expected outcomes and results and exit strategy help with a successful partnership?
With everybody else being quiet, I'll just keep talking here, but be careful, Matthias. I think it's absolutely crucial that you set expectations early and right. You need to allow for a little phase of finding out where's the best opportunity, where do we want to go with that. So if you start the first conversation already with set expectations, you probably put yourself in a box, and that might be very limiting. Allow yourself for a little bit of time to find out what is the partnership model that makes the most sense. Set expectations right. This is what we can do as a startup company. This is what we can do as one of the large incumbents in the industry. And then stick to that plan and avoid changing it every time. Because one of the things we are really good at in a big company is we make a decision today, we wake up tomorrow morning and we question that decision. A startup company cannot afford doing that. You will be out of cash before you have done anything. So stay focused on that. And also with big corporations, we have so many different business units and business segments and whatsoever. There probably is many opportunities to cooperate between startup company and corporate. Don't go after all of them, because the large corporate will outnumber you in every meeting. And you can have more meetings, and you can have more meetings, and you can have more meetings, but what you really need is purchase orders. So focus on one opportunity and pull it through.
So we need a cozy courting period before we put some real ring proposal on the table, right?
I think there's some courtship before you go to the jeweler.
Okay, good.
And I would second that. Right? I think the courtship period is very important, but also underlying that is a business reason for doing so. At the end of the day, the startup has to be able to sustain itself, and if it can't sustain itself, then it could be a very interesting courtship, and then it just goes away. So underlying that is the business reason to do so. And having that common understanding for that is crucial.
Fabien, you wanted to add something to that? Maybe from your date last night? Just joking.
No, I was just wanting to complete what Gerd said. I think it's very important that the huge corporation doesn't kill the young startup. So in EDF, what we try to do is to have a kind of dedicated team to bridge between the startup and the corporate culture. And you know, we are very big conservative. We like long meetings. You know, lots of meetings. So you also need, if you want really to foster, to develop synergies between the startup company and the corporation and the big corporation, you need to have the right people to bridge between the startup that understand the entrepreneur from the startup and the big corporation and its culture, to make it easier for everybody.
I think that's a very good point. I think back, I started a company in the UK. It was acquired by a big engineering company. I was locked in for 3 years. After that, I only wanted to leave because what I like doing is this, out there, marketing, branding, but they, you know, wanted me to be at the board level all the time, presenting figures. That was not what I was enjoying. And often startup companies, you have a scientist, an engineer. Yes, that guy needs to learn that he needs to hand the real driving of the business over to finance people, management, and sales and marketing. But if you don't understand that entrepreneur, that engineer, he'll disappear very soon. But sometimes you need to manage that engineer, that scientist, in the right partnership by an appreciation of what are his strengths and his weaknesses. A little bit, I guess, like a real life marriage partnership. Only if you understand the other partner very well, you're going to be able to manage it properly for long-term sustainability.
Just to stick with that picture here, I sometimes describe my role, especially then as a board member post closing of our investment, as a marriage counselor. So the marriage between portfolio company and an operating unit in Siemens, and there's good days and sometimes there's not so good days. And in those not so good days, we try to help. Sometimes it's just re-establishing communication or sorting out some misunderstandings. Sometimes it's a little more fundamental, but that's what I call the marriage counselor in me.
Sorry, just to take the marriage metaphor even further. When you get married, it's not just the spouse. You have the in-laws, you have the kids, you have the cousins, and so on and so forth. And that's where it gets really tricky, because there are many pieces are required to make any partnership work. It's not necessarily just bilateral. And this is a key that, you know, sometimes the actual sort of the process and the effort that goes into managing the partnership is as much or even more effort than sort of the actual business itself.
So any questions to our marriage counselors over here?
In this session, you have talked about marriage and putting two people working together, but you did not really speak about specifically about Asia. And my question would be, do you see any specific characteristics for a successful partnership or a successful investment with Asian startups compared to the other parts of the world?
It is indeed a great question. It's a loaded question. I think there's a lot to that. I don't think there's a one-size-fits-all answer to that question, because it really depends from country to country. Let me maybe bring up two examples. One is the local one, and I'm looking at my friend here, in working closely with EDBi and their insight into the market and what makes sense and what not. They're much closer to the opportunity here. They've actually helped us to avoid mistakes. So that's a very valuable one. But to get a little closer probably to your question, let me talk about investments we've done in China. And in China, we've seen a little bit a different deal profile. In the US, where I'm based, and in Europe, where we do most of our investments, those investments typically are very heavy on technology. It's a technology that becomes embedded in a Siemens product, and we take that to market. So that has become a little bit the default model for us. What we've seen in China is innovation more on the level of what's the business model, or how do you bring something to market. So those companies were actually more about taking something, offering something to the customer, rather than creating a new capability that is then packaged up with something else. Which also means that the deal profile is a different one, the requirements for the team is a different one, and it just creates slightly different dynamics, but ultimately the alignment has to be a similar one. We're looking into a couple opportunities in China right now also, where it's about improving our access to the market, which is something we have traditionally not done in the other geographies.
So I'll just add a quick word. We have the same experience at EDBi. I mean, the kind of opportunities we see in Asia and the US and Europe are different. And you know, I will paraphrase it a bit differently. I mean, the kind of deals we see in Asia are more about application of technology, whereas the kind of companies that we see in the US and Europe is more the creation of technology. And so the kind of value add that we would give to a Asian companies will be slightly different from those that we will see in the US. So for the Asia kind of companies, it's more about, okay, there's a proven technology and there's probably also a proven business model. But of course, you can't take it lock, stock, and barrel and apply it in a different market. So it's about customization. It's about also localization of management team. At some point in time, you can only have so many people that you can parachute in, but when the business grows, it's about building a local team, and then the local team being able to execute and in tune with the US or Europe headquarters.
Maybe our two additional panelists, Fabien and Han Meng, can comment on this one as well as a kind of wrap-up round, because I think the coffee break has already started. We started a little bit late, and maybe you can just briefly comment on this, what you think are the main differences. I have one final comment on that. That's going back to our romantic discussion.
EDF is in China, and I'm working in China, so I would say that for any other businesses that a foreign company wants to do in China, you always have to find the right partner. So concerning Electranova Capital, we don't have that many ambition in China because our fund is focused on Europe, and we have 20% of the fund that we can invest in the US and China. But if we do so, we will always do it with other VCs. You know, we will go into syndicate to invest. So really, if you're talking about investment in China, independently from the format of the company or the stage of the company, I think what is important for us is to go with a VC firm. We are LPs in a Chinese VC firm that can propose deals to us, and this is how we want to do the business in China.
Excuse me. I think that taking the metaphor yet another dimension. I mean, Asian startups and sort of corporate VCs like EDF and Siemens, it's like a cross-cultural marriage, right? So it's not only sort of like talking about sort of Europeans investing into Asia, Americans investing into Asia, but now sort of like with EDBi, there's also Asians investing into Europe and the US and so forth. But we can't even speak of Asia as a homogeneous market. China is very different from India, from Indonesia, from Singapore, right? And all these must be taken into account, and it's part of the equation in making the partnership work. And it is not easy. I would say that it is actually very difficult. The cultural differences are very important at the outset, such that there is actually a meeting of minds. It's not as simple, because people assume many things simply because of the perspective and the background that they have. But it is not the same. The person on the other side of the table does not necessarily have the same perspective and background. However, for truly successful partnerships, the thinking actually does have to be global. So it's not a question of the Asian startup saying that, hey, this is the way we do it here in China. Well, life's like that, right? So if you want to be successful on a global basis and not just in China, then, well, you have to think about how other people do it outside of China as well.
Very wise words. It struck me one day when my lovely ex-Chinese Malaysian girlfriend blew up, and I tried to give you hints, but nothing changed. Oh, in Europe, women tell us bluntly what they don't like. So that day I realized there are big cultural differences. I was like, why didn't you tell me? No, I tried to give you hints, but you didn't get them. So I think, communication, cultural differences, trying to understand one another, and for the purpose and interest of a common success, we try and move from both sides closer together so we have a successful working partnership, rather than things being hidden and uncovered from both sides. So I think this was a very entertaining session. Thanks so much for our very seasoned Cleantech marriage counselors. I'm sure they'll be able to book a session for you in case you're struggling with your partner at the moment and share their insight. So a big applause for all of them, and thanks for you.